Most traders know what RSI overbought and oversold means, but almost nobody knows how to actually trade it. Not just, oh, the RSI is below 30, let me buy it, but I'm talking about a structured, repeatable system where the RSI is your first alert and price structure is your confirmation. Today, I'm breaking down 3 real cases directly from this Bitcoin chart, each one starting with the RSI, then zooming into the price action that confirms the trade. I'll show you exactly how to size the position, where to put your stop, and what the trade is worth in real dollars. And stay until the end, because the bonus case is the one that ties it all together. It's a full trend reversal. RSI coming from overbought, price breaking out of a wedge to the downside, and a move straight into the next major support level. That one ran a 2-to-A risk to reward. I'll show you exactly how to catch it. Let me rent you. This is Bitcoin on the 1-hour chart. Down at the bottom, we have the RSI, the relative strength index. Here's how I use RSI in my process, and this is important. RSI is always the first thing I look at. When the RSI hits an extreme below 30 oversold or above 70 overbought, that's my alert. It tells me to pay attention because something is happening with momentum. What I do next is zoom into the price chart and ask, is there a structural reason to take this trade? A key support level, a resistance zone, a strong candle pattern confirming the move. RSI opens the door, price structure walks you through it. I'm trading a $10,000 account in all these examples, risking between 1 to 2% per trade. That's $100 to $200 max loss. I'll show you 2% on each case so you see the full potential. Okay, let's approach the first case. The first thing I look at is the RSI. And right here, it has dropped below 30 into oversold territory, exactly at 24.55. That's my alert. Something is happening. So now let me look at the price. I zoom into the price action and here's what I see. Price has come all the way down to 78,800 approximately, which is a previous support level. And we can see it from here, zooming out. This is the support level. This is a zone the market respected before. Price is now testing it again. And what does it do? It bounces. Price was pushed down there, the RSI told us momentum was exhausted, and the support level told us where buyers were likely to step in. When price dips into support and bounces, it's grabbing the sell side liquidity sitting below that level, then reversing toward the buy side liquidity sitting up at the resistance above. That gives us a clean directional target for the trade. So the way we approach this trade is looking at the primary signal RSI below 30 on an oversold zone. The confirmation is the price bouncing off at 78,780 at the previous support. Entry at $79,071 at support level on the closing of this bullish engulfing candle. Stop loss of 1% at the price of 78,277 approximately, below the support zone that invalidates the setup. The target of our trade is 1 to 3 risk to reward ratio, and 81,844 approximately is the previous resistance zone, 3 times the risk above the entry. Now let me walk you through the position sizing so you understand exactly how to place this trade. I'm risking 2% of $10,000, which equals to $200. You can choose anywhere between 1 to 2% depending on your confidence, but I use 2% here to show you the full potential. My stop is $800 below my entry, and that comes from subtracting the entry and the stop loss, which equals $800 in my case. How you get the position size is by dividing risk and stop distance. In this case, $200 divided by 800 equals 0.25 Bitcoins. If my price hits my stop at 78,270 approximately, I lose exactly $200, not a cent more. If my price hits my target at 81,440 approximately, I make $600. That's a 6% return on my account from one trade. This is what disciplined trading looks like. Not hoping the trade works, but know exactly what happens in both scenarios before you click buy. Okay, now let's look at the second case. Now the RSI has flipped. That is my alert again. Momentum is overheated on the upside now. Let me look at the price. Here's what I see on the price chart. We are inside a contracting wedge. Higher lows and lower highs forming a compression. And right now, price is pushing into the upper boundary of that wedge, which also lines up with a key resistance level at 81,660. Now watch what happens at that resistance, and this is where you need to read the candles carefully. Price pushes up into 81,968, then sellers reject and pressure builds till you get a tweezer stop. Two candles with virtually the same highs, both rejecting that exact level. That's the market telling you sellers are defending this price with precision. Selling pressure is confirmed, but you don't enter yet. The tweezers tell you there's rejection. The bearish engulfing candle is what tells you the move is starting. What you're waiting for is the bearish engulfing candle to break below the support level, sitting beneath those tweezers. That break of support is your confirmation. That's your entry trigger. Not at the resistance, not at the tweezers, but on the confirmed structural break. So you have RSI overbought, price at the apex of a contracted wedge, tweezers stop rejection at 81,470, and a bearish engulfing candle breaking below support. 4 layers of evidence. The wedge is expanded to the downside. This is the bearish trend reversal. The entry trigger is at 80,690 on the close of the bearish engulfing candle breaking support. Stop loss again is at 1%, just above the tweezer top confirming resistance. The target is still 1 to 3 risk reward ratio. 78,250 is 3 times the risk below entry. So on the second case, we have the same approach. 2% of $10,000 equals $200. Subtracting the entry and the stop loss equals to 800, which is the stop distance. Now dividing $200, which is the risk, and $800 is the stop distance, equals once again to 0.5 Bitcoins. If the price hits the stop loss, I lose $200. But if the price hits the target, I make $600. And if you already took the first case and banked $600, you've already tripled this trade's risk before you even place it. So the tweezer top is the warning. The bearish engulfing candle breaking the support is the signal. These are two distinct things. And waiting for the second one is what separates a disciplined entry from jumping in at resistance and getting stopped out on noise. After the second case, price didn't just dip and recover, it broke down hard. And that break was the bonus trade. So before we get to the third case, let me show you how the bonus was set up, and because this is the most powerful setup on the whole chart. Price was rejecting the highs, but here's what you're watching for next. Not just the RSI rolling over, but price structure breaking down. Look at this section of the chart. After multiple rejections at the upper trend line and a series of lower highs performing, price was in a wedge, compressed between rising lows and falling highs. This is contraction. And then it happens a strong selling pressure that breaks price below the wedge support. Not a slow drift, a decisive high momentum break. That's the market telling you the compression is over. The energy is releasing, and with the RSI having been overbought, rolling over before this break, you know sellers are now in control. This is a bearish trend reversal. The target is now the next major support level at 74,840. You can clearly see on the chart from the support line where price had previously found buyers. The entry is the confirmed break below wedge support on the bearish engulfing candle close. The target is the next major support level with a risk to reward ratio 1 to 8, still risking 2% of the account. Since the bonus trade has the same entry point and the same stop loss, the position size remains the same, with the only difference that now we are aiming for an 8% return. If the stop hit back inside the wedge, I lose $200. If the target hit the take profit down here, I make $800. That is 8 times what you risked. On a $10,000 account, that's the difference between a week of grinding small trades and one clean setup that moves the needle. Okay, let's now approach the third and last case. After that big bonus move down, the RSI has been pushed down deep into oversold, sitting at 19. The indicator is screaming that the move has been excessive. Sellers have been in total control. But the momentum can't stay extreme forever. So let me look at what price is doing. So price has arrived at the level we already knew about, 74,850 approximately, which was the previous support. This was the target from the bonus trade, and now it's the setup for the third case. You can see a huge bullish engulfing candle right at that support level. A large green candle such this shows that buyers are entering aggressively, rejecting the lower price and reclaiming the range in one candle. The RSI oversold at a non-support level with a bullish engulfing candle. This is a high conviction long. The entry trigger is just above the support level at the close of this bullish engulfing candle. Stop loss as usual at 1% below the previous candle's lows. Target here, once again, still the same, 1 to 3 risk to reward ratio, 3 times the risk above entry. Position sizing still the same, we are now quite familiar. We are risking 2% of $10,000, which equals $200. Subtracting the entry and the stop loss equals to 800 stop distance, and dividing $200, which is the risk, by $800, the stop distance, that equals to 0.25 Bitcoin, which is our position size. If the stop hit below the low, we lose $200. And if the target hits our take profit of 3%, we make $600. Now let's look at the full picture on this chart. We have 3 trades that banked $600 and 1 bonus trade that banked $800. That is a total of $2,600 in profit from 4 structured trades on a $10,000 account, with a maximum of $200 at risk on any single one. Now let's quickly sum what we just discussed so far. The process is the same in every case. RSI first, it's your alert. Price structure second, it's your confirmation. Entry, stop, size, all defined before you touch the order. That is how you trade with a plan instead of gambling. Drop a comment telling me which case made the most sense to you, and feel free to ask any questions in the description below. I'll see you in the next one.